From rising inflation rates to extreme currency movements in the market, we are prepared to bring you the latest economic updates across the year. Hi, my name is Tharusha and welcome to the Monthly Economic Watch with First Capital. Starting off with the CBSL highlights, on 24 January 2023, CBSL conducted its first monetary policy meeting for the year, in which the Monetary Board has decided to maintain the standing deposit facility rates and the standing lending facility rates at their current levels of 14.5% and 15.5% respectively. Meanwhile, statutory reserve ratio applicable to LKR deposits of licensed commercial banks also remained at 4%. Looking at the inflation for the month, as expected, inflation continued to display declining trend for the fourth consecutive month to 54.2% year-on-year, while month-on-month inflation increased by 0.5%. Year-on-year inflation of food group has decreased to 60.1% in January 2023 from 64.4% in December 2022, while non-food group decreased to 51% from 53.4% in December 2022. Analyzing the month-on-month inflation, in food items, sea fish, coconuts, eggs and rice significantly contributed to the increase. Non-food price increase was mainly noted in education, alcoholic beverages and tobacco items, and clothing and footwear. Analyzing the year-on-year inflation of CCPI, contribution of non-food items were mainly due to the increase in price of transport, utilities and restaurants and hotels. Looking at the NCPI for December 2022, NCPI fell below 60% and recorded at 59.2% year-on-year compared to 65% in November 2022. Moving on to M2B and credit growth, private sector credit further contracted by LKR 72.6 billion in December 2022 due to the higher lending rates, while state credit reflected a net borrowing of LKR 152.6 billion. On a year-on-year basis, state and private credit together recorded an increase of 6.4%, and on month-on-month basis, it is a drop of 1%. Foreign reserves improved by 90 million to $1.9 billion in December 2022. Meanwhile, market liquidity fluctuated from negative to positive figures, yet ended the month negatively with slight improvement. In terms of the currency, LKR remains steady against 362 level against US dollars and slightly depreciated against most of the major currencies, including Australian dollar, China renminbi and UK pound. In terms of the government securities, there were 1.1 trillion worth of maturities during January 2023, and the new issues through auctions worth of 694 billion, creating a deficit of 443 billion. In terms of treasury bills and bond markets, the secondary market commenced the first month of the year on a bullish note as buying sentiment escalated among investors following restrictions on STF availability to licensed commercial banks and a successful progression of the debt restructuring talks with India and China. Accordingly, yield curve edged lower while auction yields too inched down at the weekly T-bill auctions. Moving on to the finance sector rate movement, AWPR declined to 25.3% from 28.2% in December 2022. In terms of exports, earnings from exports remained resilient during 2022, recording the highest ever exports surpassing LKR 13 billion, a growth of 4.9% year-on-year. Meanwhile, imports declined by 11.4% during the year 2022 to LKR 18.3 billion. While during the month, exports for the month of December 2022 recorded a decrease of 7.7% to LCAD 1.1 billion as industrial and agricultural exports contracted during the month while growth was recorded in mineral exports. In terms of imports, with the continuation of import restriction measures, import expenditures down by 36.4% year-on-year to 1.4 billion. Decline in import expenditure noted across all segments, while imports of investment goods, mainly machineries and equipments, fell by 55.8% year-on-year. Accordingly, balance of trade shows a deficit of USD 358 million. BOP for the year 2022 recorded at negative USD 2.8 billion compared to January to November 2022 amount of negative USD 2.9 billion, recording a net inflow of USD 115 million for the month of December 2022. Moving on to the tourist arrivals, the total number of tourist arrivals to Sri Lanka continued to surge and surpass 100,000 mark in January 2023 after 9 months, signaling a revival of tourism in the country. The total arrivals for the month was recorded at 102,545, displaying a substantial increase of 24.6% compared to January 2022 due to the peak travel season, resumption of multiple airlines and cruise tourism to Sri Lanka. Finally, moving on to the global market, major indices were seen recovering during the month from the economic contraction which was seen during the last year. So with that, we conclude the monthly recap for January 2023 and stay tuned for more updates in future. Thank you.